Hey, welcome back, and today I want to reveal my 4 favorite stocks to sell puts on. I'm going to walk you through why I like these stocks, and also we'll take a look at the premiums and what my strategy is when selling them. But in case you just want to hear what stocks I'm selling puts on, I don't want to waste your time. The 4 stocks I like to sell puts on are Crispr, Space, Tesla, and Palantir. Now, depending on the market, I do have a watch list and there are other companies I sell puts on, but these are the 4 main ones because these are the companies I really like, and also they have higher volatility, so that means their premiums are worth it for me to sell puts on. Let's dig right in. The first company we'll talk about is Tesla. In case you don't even know what I'm talking about, this is a quick overview of what selling a put means. When I sell a put, somebody is paying me and I am selling the buyer of the put the right to sell their stock at a certain price called a strike price. So somebody that buys a put is afraid that the price of the stock is going to drop a lot or drop a little bit and they won't be able to sell their stock at a certain price. So what they'll do is they will pay me. So they will pay me, the put seller, and I need to take on that risk that this stock could drop a lot and I have to buy their stock. So let's say I'm selling this $600 put. I get paid $35.35 per stock, times it by 100, which is $3,535. If the stock drops below $600 upon expiration date, which is December 18th, they have the right to sell me their stock at $600. Even if Tesla is at $400 or $300 or $200, I still have to buy their stock at $600. So in that situation, they win in this transaction because they're able to sell the stock at way above market price. And on the flip side, if the price of the stock is above $600, that means if they wanted to sell it, there's no reason they would need to use this contract. If Tesla is at 650, they could just sell at 650. I get to keep the full amount of premium for essentially nothing. So they are just paying insurance to me, worried that it might drop, but if it doesn't drop, you get to keep the premium. So looking at Tesla specifically, I'm not going to explain what the company does. I think most people already know. Implied volatility is at 120%. When I'm selling puts, I like stocks that have implied volatility of at least 40%. That's when the premiums start getting juicy. And Tesla is one of the most volatile stocks on the market. So there is a lot of risk. But where there's risk, there's also opportunity. So with Tesla, I am a very hard bull. Long term, I think Tesla is going to be a multi-trillion-dollar company. There's no price right now that if I got Tesla, I would be that upset about. But what I like to do with Tesla is I like to sell puts around the 20 to 25 delta because there are large swings. And even at the 20 to 25 delta, sometimes it might touch it. So delta is basically the chance that the stock is going to swing to this price level. So let's say at $540 strike price, there's roughly about a 20% chance it could touch this 540. And I like those odds. If it really were to touch 540 or go under 540 and I'm forced to buy it, I think that's a totally fair price. If the stock drops to a little bit under 540, let's say 539, I'm actually not buying it for 539 because I had this premium. I would actually be buying it for 526. So if I want to eventually own this stock, selling puts is a great way to own it. The next stock we'll take a look at is Crispr. Crispr focuses on the development of transformative gene-based medicines for serious diseases using its proprietary gene editing platform. To actually explain it would be a whole separate video that I'm not qualified. Basically, Crispr is a company that is able to edit our genes and eventually someday will be able to transform how we approach healthcare. This is a company that I'm also very bullish on long term, so I'm okay to own it. I think when you're selling puts, you have to be okay to own it. It has to be a company you support because you will be assigned at some point. Let's look at Crispr. When I sell puts, I like to sell 30 to 45 days out. That is the range I'm most comfortable in. That gives you a lot of time to close your position or adjust your position. I don't sell weeklies. I don't sell 2 weeklies. In very rare situations, I might sell something 3 or 4 weeks out. You want to give yourself time and you always want to take profit at 50%. I cannot reiterate this enough to you. I cannot reiterate this enough to me. The market will swing in the wrong direction and I need to hold a position for far longer than I need to when I could have just taken 50% so much earlier, gotten my money back and opened a new position based on the current market conditions. Let's say we want to sell a put. Today's date is December 12th. I would do probably January 22 is a little bit farther out. I would say January 15th. That gives me about 33 days. Like I said, 33 to 45 days. And we could look at the premiums of 30 delta. Crispr, I don't mind selling 30 delta because I want to have a little bit more Crispr. I'm trying to build my position. 30 delta is that sweet spot of getting a nice amount of premium, but also if you were to get assigned, meaning you have to purchase the stock, you would also get it at a good price. At 30 delta, if I were to get assigned, I would ultimately be owning this stock at about $127, which is a good price for Crispr in my opinion. And one thing I also didn't know is that you generally want to sell puts on a red day and when volatility is extra high. So when I say red day, hopefully you can find a time when it's at a dip, because if you're finding a dip, that means you could sell the put even lower and also get a pretty good premium. So we can see here that selling a Crispr put, an expiry date of January 15th, our premium would be $795. Now $795 to hold for just 33 days, that's a really good premium. If you were to get that every 33 days through the year, $795. So let's say 795 times 11. That's $8,745. And assuming the amount of money you need to sell this put, you would need the strike price amount on collateral. We'll round up to 140 times 100 contracts with $14,000 or $15,000 on hand, depending what the Crispr share price is. You could make, we'll do the math exactly, a 58% return on your capital. A 58% return on your capital would be insane. This is the ideal situation. Don't get too greedy when you are selling these puts. Personally, I think anything that beats an index fund is already pretty good. And if you can double or triple those returns, you should count your lucky stars. That is a good year. The next company I like to sell puts on, Palantir Technologies. Palantir is a public American software company that specializes in big data analytics. Basically, a lot of their work involves helping the government do counterterrorism analysis. They are a company with large contracts that aren't going anywhere and is set up for good, consistent growth. So let's go check out their puts. Come Monday, I would probably start selling January 22nd, so we'll take a look at that. Here, implied volatility is also very high, which again means a lot more risk. The stocks swing a lot more, but the premiums are also a lot higher. With Palantir, I already have a fairly large position. I don't really want to build that much more of it because I want to invest in some other things. But with Palantir, I would choose maybe 2022 delta. Palantir also has pretty big swings right now, so I don't want to be left holding the bag and buying Palantir at, let's say, 25 if it swings all the way back down to 19 or 18. I don't think that's likely, but I've been watching Palantir and it swings a little bit wider than usual, so my delta would be a little bit lower for this than it would be for Crispr. But even at, let's say, 19 or 21 delta, the premium is $153. Now $153 for, this is 45 days out, so it's a little bit longer. The return is also almost close to 50%, which would be really good, and that's in an ideal situation. Palantir, great company to sell puts on. Last one is Space. And this is a little bit more speculative because they have not had a successful launch yet. So they are a company founded by Richard Branson, and their mission is to be able to create actual space flights for private individuals and researchers. And basically anybody could go and enjoy a space ride. And that's such a cool idea. It 100% will rest on whether or not they can have a successful launch soon. In the meantime, this is all fairly speculative. If it goes well, this stock is going to shoot up. If it doesn't go well, it will definitely come down. But because of that high uncertainty, and again, with higher uncertainty, we have high, very high implied volatility. This is also a company that I love its idea. I love its mission. In the worst case scenario, even if it goes really bad, I will be able to stomach the fact that I supported this idea. And yes, I lost money, but it's a company whose mission I believe in. So I think for us as investors, we're humans with emotions. It does help. It helps a lot if you're investing in something that you really want to see succeed. And even if it fails, it's not going to make you feel super shitty or whatever. So let's take a look at space. I would look at the catalysts of when they are doing a launch and maybe adjust my expiration date based on that. But having no knowledge, I'm assuming a lot of you might necessarily not be able to follow all of the research all the time. I will keep to my rules, 30 to 45 days. Let's do January 15th, assuming we are selling on a Monday. Let's look at these premiums. So for space, it's a little bit high right now. So I would definitely look what the trend has been. So if you look at the 1 year, it's almost at the early year peak. There's definitely a lot of hype. I would be a little bit more careful selling puts. If this is a company you want to get into ASAP, I would just sell 30 delta puts. If this is a company that you just want to make premium on, I would sell 10 to 15 delta puts. I would keep it very, very low because I suspect that there's a high chance it's going to swing back down. But let's take a look at the very, very low deltas. Yeah, 10 delta, you could still make $83 with $2,200 in collateral. And that's still really good. $83, 4% return every 40, 45 days. That's really good. One thing you can also do is you can sell different puts on different strike prices. I think that's also very smart. Do a little bit of technical analysis, see where the support and the resistance is, and then you can sell different puts at different supports. That way it might hit one of these, but it won't hit your other two. And again, that's totally okay because if you're selling puts, you're already accepting that you might have to buy it. And of course, implied volatility is very high. That's why these premiums are quite good. And if you take a look at, let's say, the S&P 500 stock, it's okay to sell puts on, but there's a lot of statistics that show when implied volatility is this low and the premiums are this low versus the amount of collateral you need, ultimately it actually makes more sense to just hold the stock because the premiums are not high enough. Okay, so for space, 11.7 delta, 83, you get a 3.8% return over a roughly 45 days out. If we look at SPY with the same delta, I think 11.5 is the closest. 1.94, we'll do that. 1.94 divided by 330. 1.94 divided by 330. You are getting a 0.58% return versus a 3.8% return. And that's why selling puts on stocks with higher implied volatility is generally more favorable. And I have to say this again, it's more favorable because there are more risks. But if these are stocks that you're okay to own, if you're selling puts at the right times on red days, on dips, you can make a lot of good, consistent money doing this. I mainly sell puts on my TD Ameritrade. In my Robinhood, you can see that I was also selling puts. That's how I was able to make a lot of good, small, but consistent income. Don't be too greedy. Here, I started YOLOing a little bit hard, and generally it's been good until very recently, but we'll see how that turns out. But for most people, I think selling puts is a great way to build good, small, consistent income. Don't be greedy. Take profit at 50%. Do it on stocks you love, and you should be okay. Anyways, that's all I have for today. I hope that helps. This is Green Knight Trading, where Squires become Knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.